All right. Well, welcome to another episode of Coffee and Charts. I know that there were some questions that were being thrown around in the Discord late Friday about like how to play zero DTEs and things of that nature. So what I did to try to save us a little bit of time, I went ahead and actually did all my charting yesterday. Um, adjusted my broadening formations, set my price levels, my entries and exit points, stuff like that. So I'll go over those really quickly. That way we have more time for actual questions and answers if there actually are any. So as usual, I'm going to start with Apple. So I've changed the format up a little bit on my charts, at least when I'm going to do these weekly coffee and chart sessions. So in the upper left corner now, I'm going to have the month, and then we'll have the week over on the right side. The day is still pretty much where I focus. And then I just have the 4 hour. I might as well leave it blank, but whatever. I don't ever play with the 4 hour. So yeah. But daily is still my focus. I just have the monthly and weekly up because I know those levels are relatively important, especially for support and resistance levels to map out. So we'll be able to look at those. So as of right now, Apple, we're kind of coming up the last week of April, I think. So Apple is 3-1 on the month. If we by some crazy, I mean, I guess it's still possible because it's only 11, bucks away, but 150.38 is the low. So then that would take us 2 down for the previous month. So that's a pretty substantial level, 150.38. So if we look at the week, we did go outside week. A lot of tech did the same thing. It was a bloodbath. If you're somehow playing calls last week, then I don't know where your head was at because we were only talking about puts, but we did go outside. So now, I mean, the next actual price target, even on the weekly, is that monthly low of 150.38. So the weekly was a shooter even. Man, I mean, that's a shooter if I ever saw one there. Long wick. Real body was nice and small, but towards the bottom. So the sellers definitely were in control or took control of it later on in the week. Oh, gotta mute somebody. Hold on. I'm gonna go ahead and mute you one way, unless you can mute yourself right quick. The administration is hoping to fulfill promises there. Inflation and global energy needs. Oh, okay, I'll do it. Okay, so that is Apple. So then on Friday went 3-2. Now I did draw a broadening formation. This is a newer one. I connected the low of 418 to the low of 411. Now notice we're sitting right there at the bottom of this broadening formation. I'm not necessarily expecting a bounce. I'm just saying this level, this does have some significance. So we could continue expansion to the downside and the older broadening formation. So if I zoom out right quick, I draw all mine on the daily, but the older broadening formation here brings us back from mid-March to late February. So that is, well past the 150, the monthly low. But that is obviously something that we want to keep an eye on. Just because we're already sitting here at the bottom of the new broadening formation I drew, which is interesting that's pretty much where we stopped on Friday. Always find that cool, being able to connect older lows together, and then all of a sudden, like a current low pretty much stopped right there. It just interesting, always interesting to me. So I'd be looking at Apple on the downside still, just like everything else, until we somehow get a weekly to go 2 up. That might be a bit. All right, so next is AMD. Same story, different chart. Another down month. We've already gone 2 down on the month pretty substantially. So our next price target is actually going to be the low here of July of 2021, which was $84.24. Sorry, I realize I have a lot of lines. Again, I draw my stuff on the daily, so it looks a little more spaced out. I think we all are familiar with how I draw my charts at this point. So what we're going to be looking at, I've already set the price levels on the daily. Again, we're sitting at the bottom of another broadening formation. I almost looked at this as like a trend line to the downside. I mean, it's low, 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 pretty much this low as well. just sitting right there. And then another broadening formation further back. Very aggressive to the downside, though. Connected the low of March 7th to the low of February 24th. And we just get that really aggressive, that really aggressive bottom of the broadening formation. So that, could be taking us down to the 80 area if we just kind of continue the slide downward. I guess the intersection would be like around here, that 78 area. So definitely things to be on the lookout for when we are playing AMD, any tech really, honestly, anything at this point. Just nothing really looks great. Again, we had on the weekly a 2 down, pretty much a shooter. The real body's a little bit bigger than I think we'd like to see for an actual shooter, but it definitely tells me that the sellers were in control. They took it back from the buyers. So, we didn't go up. That's the key thing here. So as far as AMD goes, again, I'd be looking at puts, not really looking at calls right now. Bank of America, 2 down on the month already. Next price target's going to be the low of July 2021 again, which is 36.51. The week was interesting. Zoom in on that guy. So we had a shooter, a failed 2, almost ended up going 3. The high was 40.37, so we were off by 3 cents in order to go 3. Make that an outside week. But the buyers kind of took some serious control beginning of the week here. We can see what the 18th and 19th look like, and then sellers stepped in just like with everything else and completely, slapped it down and said, no, thank you. We're not going higher right now. So yeah, I mean, while that's a failed 2, don't consider it a failed 2. That's just still a 2 down to me. I mean, there's no real body. The buyers just outweighed the sellers basically. But I mean, the sellers definitely took control of this candle and took it from 40.38 all the way down to roughly like 37.50-ish. So that's the week, that's the month, and another 2 down continuation on the day. We're looking at the first price target really shallow, 37.22, coming to the bottom of this broadening formation. So banks are interesting to me, right? Like things are kind of going bad in the economy. The stock market's basically reversing all of its nice gains that it's had over the last 2 years or so since COVID started. And I always wonder what banks are going to do because interest rates are going to be going back up, right? I mean, everybody, I think, is well aware of that. So is this bottom of the broadening formation a significant area for banks? That's something to keep an eye on. So we're looking at the $37 area for maybe a potential bounce, just to see what we end up doing here as a significant level to me. Otherwise, more downhill slide, 36, 37, 35.81. I think that's really all I've drawn for now, just on Bank of America here. So yeah, and again, that broadening formation, I actually that's just going to be connecting previous, let's see, the August of 2021 to March, the beginning of March. So that's our broadening formation there. Notice I'm not talking about the top of any broadening formation right now. That's kind of a bummer. But hey, that's one of the things that we like to do, right? We can play both sides with options, the short side and the long side. Don't need to have a massive account to be able to play the short side on it with options. All right, so next one on the list is CCL. Again, we actually went 2 up on the month, but the buyers are definitely in control and have pretty much brought it down. The area that, and then we have let's see, the week, again, a failed 2. That's definitely a failed 2 on the week. So I'd be looking at entries under 1875 for a nice move. If you're going to try to maybe hold this for a couple days this coming week for a move down to 17.99. So like a 75-cent move, which for CCL, pretty large. So, that's actually, that can probably be done in a day. looking at the ATR. So the ATR is 97 cents. So 75 cents for that first move, price target for the previous week low, to make it a new, continue a 2-2 reversal on the week, would be pretty awesome. So yeah, that's what I'd be looking at. The $18 puts probably. The green area here, that is a question I always get. So again, bringing it up, that is an area I've identified as a bounce, which I'm going to call a liquidity zone, meaning that somebody with big money felt like it's gotten low enough in price, and telling me then that get it scooped up and it gets bought, and for a significant move to the upside. In that case, it was probably around this area here. Let me actually zoom out. I hate how the charts do that. Yeah, probably. Yeah, I mean, this area seemed to have a decent bounce back in early 2021, and then we had a nice little bounce here at at the beginning of the year again. So that's an interesting area, right? Could have some significance, and that's what I've been trying with this little liquidity zone experiment here. Does this area still have relevance? So we'll see. I mean, we did have some continued consolidation as well. So see what happens when we come down to that 1830 area. So whether we get a bounce or just a drop through, and continue downward to the bottom of this Browning formation. Could technically draw another one by connecting some visible. Well, why is this not letting me do my thing? Here we go. Connecting some visible lows to more visible lows, more recent ones, I guess. So we have a move down to the 1750 area as the bottom of that Browning formation, right below that liquidity zone. So maybe we get a bounce, maybe we don't. But again, these things, the reason why I put lines on my chart and price levels is to give me some sort of indication on whether I should get into a trade, right? So it comes down to this liquidity zone. I'm going to be tightening my stop loss. So I might get in at under 1875 and play the move to 1836. But now that, to see if this zone still has relevance, I'm going to tighten my stop loss so I don't take an actual loss on this guy if it does decide to bounce from that zone. And then again, it comes down to the Browning formation, the bottom of it, and we starting getting close. I'm going to tighten my stop loss if I haven't already, in case we get a bounce from that Browning formation. So that's exactly why I put these levels and things on my charts. Okay, so 3-2, probably looking at a 2-down continuation, sadly. So we'll see what happens there. Your entry would be under 1875. The first price target's going to be 1836. So you could still be looking at $18 or $19 puts, and that weekly level was $17.99. DraftKings. So I've been playing DraftKings off and on, and it's definitely a nice one to play like on Mondays and Tuesdays and Wednesdays. Bank of America, CCL, DraftKings, Ford. Those are all part of my small account strategy that I'm going to be going over in a series that I'm starting to work on. But DraftKings is at all-time lows already. I completely have forgotten about this. So, I mean, as far as range expansion goes, I mean, you draw a Browning formation, and that's a level. A lot of people use fibs. That's Fibonacci lines. That's a perfectly acceptable thing to try to see what a 61.8% drop looks like and whatnot. I'll just go with a Browning formation, and I'm just going to play the next nearest strike. So if I do get a 2-down continuation on the day, that entry would be after 1373. So I'd be playing a $13 put, unless there's a 1350, which there is. So I'd be playing a $13.50 put, basically at the money, so that you get your quick gain and you get out. Now the downfall when you're looking at DraftKings right now, the put side is pretty lame when it comes to open interest and volume. So your spreads are going to be a little wider than usual. I mean, they look pretty decent right now. So that's good. But if the open interest and volume stays pretty low, the thing to keep in mind there is that the spreads and generally get a lot wider, and if you have a very tight stop loss, you're probably going to get stopped out quick just because of the fact that those spreads are large. So keep that in mind. Yeah, so that's we're looking at a 2 down now. It's interesting to me that it wasn't a very big 2 down yesterday on Friday. Whereas a lot of the range of the candles, the average range that a candle has on DraftKings is relatively larger. So yeah, I mean we missed it by a good 40-50 cents almost. So that's interesting. Does that have some relevance possibly? So the reversal to the upside would be $14.72 for your first price target of $15.99. Again, I'm playing at the money stuff with DraftKings because we're sitting at all-time lows and it doesn't move much. So you're not going to want to get something too far out of the money. Otherwise, you're just going to be sitting here holding it, and then as soon as it goes back in a different direction for a small little pullback, you're going to probably get stopped out. Again, especially on weeklies, if you're not in the right direction with your bet, then you're gonna go negative pretty quickly in your trade. All right, Ford. Ford's 2 down on the month. Failed to shooter on the week last week, so we're definitely going to be eyeing this for a downside play. Just with everything else, I almost don't even feel like I need to say downside play right now. But under 15, that's where we're looking at. And that is a very significant level for Ford, $15 even. So keep that in mind. Wait for it to break below 15. And then your first price target is sadly only going to be $14.89. That's not huge. That's going to be your price target for the week. Now, the nice thing is what I'm looking at right here is actually a rev strat. So while the 1 is there, I would almost not even consider that a price target. Your price target is actually going to be more like 14.56. The only reason why I mentioned the low here of the 1 is because it does have some support. It's shallow support, but that's something to keep in mind. So you're looking at a rev strat here. So 1, 2, 2 down for your price target to be 14.56 on the week. If you're looking at a daily, then it's just going to be a 2 down continuation that you're looking at, and we are coming up to this liquidity zone. If I zoom out, this bounce here is the likely reason that I saw. I wish I could put like a label in to say like why I drew this liquidity zone. Maybe I should start doing that. But yeah, so on 4-7, we had kind of a bounce. It wasn't a very powerful one, but considering we were going sideways for so long and the rapid drop, and then we just kind of recovered from that, that had some relevance to me. So if I scroll back, that's probably the only reason I drew it. So that would be Ford. Again, looking at entry under $15. Again, that is a psychological level there. Under 15 could drop very rapidly, but I would definitely be hesitant around this liquidity zone, because if this bounce right here had some actual relevance, we'll find out. So make sure you keep a tight stop loss here, but you could be looking at the $15 puts or the 1450s, I imagine. Yeah, 1450s. All right, Ford. Facebook. Oh, wow. So pretty much did everything that every other piece of tech did. Facebook is 3, did go outside month already. Hard to see, I know, sorry. Let's see if I can do this here. Yeah, there we go. So it did go 3 on the month. Wow, so that's craziness, just doing its thing like every other piece of tech is doing right now. Big old week down last week. So coming to the bottom of the broadening formation, very realistic that we can hit this in 1 or 2 days. There is a liquidity zone that I've drawn from like 171-ish to 168-ish. So be cognizant of that. As far as the daily goes, we are probably looking at another 2 down. The first price target is really shallow. Or the entry would be below 183.27, and the first price target or support, I guess, would be around 182.67. So I'd almost just wait on my entry, get it below 182.67 for the move to 180.83. There is a gap fill down to 175.38. So that gap fill is old, very, very, very old. Holy crap. Yeah. So so from 178.14 to 175.38, there's a gap fill dating back to, wow, like almost 2 years ago, 4/22/20. So I mean, we're talking barely post COVID announcement to where everything just tanked. So that is Facebook. Go down. There we go. Okay, Microsoft didn't actually make the outside week. We have a 1 on the month right now. We did do the outside week. That is a shooter if I ever saw one. So we're going to be looking at entry below 273.38. That is, I mean, that's the daily level as well. So over here, 273.38. My price target's going to be 270. We do have that liquidity zone. So Microsoft operates with the $2.50 increments. So again, you can be playing at the money. I don't play tech on Monday, Tuesdays, or Wednesdays just because of, as you can see, the price. Small accounts like I like to do and just build up and rinse and repeat. This isn't conducive to that. It's too expensive on Monday, Tuesdays, or Wednesdays, and mostly Thursday for Microsoft. So I'll be keeping an eye on Microsoft so that, you know, Thursday, Friday come around, I have a good idea of what is in store for it. All right, MU, we have a 1, so we're on an inside month still. Just like everything else in tech, we have a shooter candle that did an outside week, and we have been kind of bumping around this sideways zone, just, you know, that we can look at here. Just, you know, going sideways basically. Now, area of liquidity we bounced from, I drew this old one and we actually tapped it and came right back through. So to me, that area is still very relevant. Now we're sitting at the bottom of one, or I'm sorry, we're sitting right above one, I should say. So move this, there we go. So we're sitting right above one right now. Once we get down to below $69.31, we have a liquidity zone that had a previous bounce right here. So let's see what happens. But definitely keep your stop losses tight. Now, MU, when you're trading it, again, early on in the week, it's actually not too bad. The MU is definitely a little bit cheaper than AMD early on in the week. The downfall is that the spreads are kind of wide. I mean, like, we're looking at a 10-cent spread right here. So that's about the max that I'm looking at if I'm going to get into something. I definitely won't be buying the ask here. I'll, you know, put in something for mid-range, you know, 190, let's say, if I were to go ahead and place an order for that. That way, you know, or probably more like the mark. So like 191, 192-ish or something kind of in the middle. So that if it executes, it executes. If it doesn't, then I'll just cancel the order. But yeah, so let's see, that's a 3. So the first price target is going to be 68.34. Again, that liquidity zone, very aggressive broadening formation to the downside. There was just, I mean, again, you could argue that you could draw another broadening formation connecting like a 3 to a 3, but I mean, that's still a pretty aggressive downward move. So, you know, be aware there. That's MU. Yep, okay, I'll look at that one here in a minute, Crown. All right, so we have a fail 2 up on Neo for the month. We have a 2 down on the week, and we have a 2-1 on the daily for Neo. So I like this setup going into Monday just because of that 2-1. Now, the downfall when you're playing something like this, where when we're looking at a 2-1, I'm trying to zoom in to where I can actually show you. Yeah, there we go. So the price level of the first entry point, you see that low of this 2 candle here. The low is $16.98. Our entry is going to be at $17.12 if we did 212 down here. So the price target, because your price target is the low of the first 2 in the set here. So once we go 2 down, right below 17.12, our price target is going to be 16.98. That's not a very big move. However, I do like this gap fill at 16.78 all the way to 15.35. That is what I'm looking for. However, we are coming to the bottom of a broadening formation. So again, something to be aware of. We can drop through, and if the market continues to move the way it's been moving, I fully expect us to drop through every single broadening formation that you've seen on my charts today. So yeah, keep an eye on that. I do want to play this gap fill. This is what I am keeping an eye on, 16.78 to 15.35. And then after 15.35, the next price target is $13. So yeah, keep an eye on that. NEO is one of the top of my lists this coming week, especially early on. Options are nice and cheap early on in the week, and then they just get cheaper. So that's one of the, again, the stocks I'll play from a strategy perspective to grow a small account. All right, QQQ. So technology, not going to look pretty. 3-1 on the month, 3 on the week. Wow. So, pretty much like every other piece of every other tech stock we've looked at. 2 down would be under 324.96 for the first price target of 319.23. Liquidity zone around there as well. So we'll see if it has some continued support for a bounce or not. But right below that liquidity zone, let me go ahead and do this right here. We have the bottom of a broadening formation. So around like the 316, 315 area. I mean, y'all, this is unreal stuff right now. Like we don't have, COVID as a, crazy announcement, but I was looking at SPY. I mean, we've gone from 3 in almost like a month. We've gone from 371 down to 324 in QQQ. That's a $20 drop. I'm sorry, a $50 drop. I can't do math. That's big. So, I mean, we go up that quickly, but I mean, gosh, like this is craziness. If I go back to COVID times, right? Like April. Where's April? Goodness, right? April, yeah. This was COVID here. So COVID gets announced like end of February, right? And then we go from 237 down to 165. So, I mean, a bigger drop, but I mean, God, like this was because of something. Now we're just looking at high interest rates, inflation, stuff like that, all, self-inflicted wounds, basically. So here we are. Anyway, so that is QQQ. So yeah, entry below 1324 to 324.56 to 319.23. That's going to be my first price target. Or you could just play, the 2 down that's going to probably happen right here under 13. Why do I keep saying 13? Under 324.96 for the move to the next support candle low, which is 317.45. Caught myself there. Again, also coming to the bottom of a broadening formation. All right, so that's QQQ. Why is this chart giving me so much problems? And then lastly, we got SPY. So SPY is going to look very similar to QQQ. We have a 2-1 right now, so inside month, 3 down on the week. Again, not a shooter. The real body's a little too big. So all that really means is that the buyers definitely took. I mean, we opened here at the 437 area for a massive drop to 425 after we tried to actually take it up on the week. So definitely an outside bar. Next price target, if you're playing weeklies, is going to be 415.79. Big old drop. So looking at the dailies, we have a 3-2 And I just again connected some lows just to show a trend line right here. But I mean, at the bottom of a Browning formation as well. But the Browning formation I'm more curious about is the one that I've drawn that's older here. So if I zoom out and look, I connected the low of the late February to the low of late January, and that would be bringing us all the way down to this 390 area. So yeah, again, I want to sort of try to be an optimist and say that we're not going to go that direction, but or that far down at least. But then again, I really don't know. The market seems to be reacting very strongly to things right now. So we'll see what happens. But this is definitely a trend to the downside here that we have been witnessing. We tried to bring it back up. Now, interesting. I just again looked at this. So is that recent? Okay, so I drew a liquidity zone here bounce back in late 2021, so December 2021. I felt like this was a pretty solid bounce up. So looks like that area is now acting as some pretty solid resistance. At least it did on the 21st. So very aggressive down now. So that's interesting. And then we pretty much just busted right through a previous liquidity zone. So at this point, what I do is remove it because it just clearly isn't valid anymore. So yeah, so then we have a move to the downside expected under 430, 425.44. The first price target 424.80. So you might as well just wait, get in after 424.80, or just have some really tight stop losses in case we do end up trying to recover a little bit. Okay, so that's going to sum up my charts. With that, somebody asked me to chart Lee. We'll go do that right quick, and then we'll open things up for questions. So it looks like I charted Lee at one point for probably you, Crown. So yeah, let's see what we got here. Actually, I'm just going to do this. We'll clear it out. Okay. So you got a 2-1 on the day. So you'd be looking at a 212, probably downside. First price target, not much. You got $22.31 as your entry. Target of 22.05. So not even like, yeah, not even 30 cents. So if you were to look at your options, your delta is pretty nice on the call side. It's all right. I mean, it's above 4 on the put side, so that's cool. You'll be able to, if you play at the money, you'll be able to, a dollar move will give you that 40 cents basically. So I'd be looking at an entry under 22.05 though, just because I take that back. I'd be looking at an entry underneath 21.92. So maybe actually I almost, because it's psychological level, probably an entry underneath 22. Then play the gap fill to $20.36. That'd be what I'd be looking at there. So let me do this here. Can't click things correctly, apparently. So yeah, that would be my play. Let's see what we look at if we zoom out a bunch. And so, I mean, if we were to connect these lows to that low, got a high and a high there. Yeah, I mean, not a lot. Very definitely play a put side. You do have a pivot machine gun set up on the daily here, so that could potentially be a reversal play if you get a a 2-1-2 up as a reversal or a 2-2 up. But again, I really wouldn't be doing much to the call side without seeing some sort of recovery, like on a weekly level. Definitely wait for a few green days in a row to before you start playing something long. Any other charts anybody wants me to do right quick? IBM, MMO, or well, MO and PDD. All right. So add IBM in the mix. One of the few things that was green last week. They had earnings. Speaking of, while I'm looking at earnings, there are companies that are having earnings that are on my list, right? Microsoft has earnings next week. Not Facebook. Who else did? Apple does. I think AMD does. 5-3. No, that's going to be the week next month. Okay. So yeah, Microsoft, Apple, Facebook. Facebook has on the 27th. Yeah, so Microsoft, Apple, and Facebook have earnings. So keep that in mind. The contracts up to that point, the 27th, 28th, whatever the dates were, they're going to be more expensive just because people are making their bets. So keep that in mind. All right, IBM. Okay, so IBM, let's see here. 2-1 on the day. So if we do go upside, your entry would be 140.44 for a price target of 141.88. And then you got another kind of shallow price target around 142. So it's not going into all-time highs just yet. It's getting there, though. 142, 143. So yeah, you got some potential. Yeah, I mean, it's IBM has a 3 ATR, so they have option contracts every dollar. So that's good. Volume is a little lighter than I'd like to see, but that's not horrible. Yeah, I'd be looking at the 2-1 play. You could have the upside or the downside. Downside has more magnitude. That now that earnings are over. What they finished actually on the 19th. So they had what is today? 24th. So yeah, they had a few days after earnings to for people to take their profits. Then after, let's see, 133.38, you do have that gap fill. So again, I'll go label that. All right, Browning formation. There you go, and that's a really deep trend. All right, MO. This is one of the first stocks I ever bought, like actual commons back in. I don't even know anymore. 2-1 on the day, 2 up, shooter-ish on the week, but it wasn't a failed one, so that's cool. Just looks like at the end of the day on the what day was this? The 21st, and pretty much all of the 22nd, it dropped just like everything else did. So if we do continue to the downside, I would almost, just because the price target for the two for the low is, right there at, so shallow, right? Entry point. So I'd be looking at something under 1536 for your entry, and probably like the 55 puts. That's to the downside. Upside, you got your 56.65 for a pretty cool move to 57. So your 57 calls will work out pretty nicely there. Trend line. We got that guy to that guy. Wow, they've just been doing nothing but up. Not a fan of it, but we'll let it work out. It does go down. All right, so MO, and then last be PDD. All right, 2-1 on the month, 2-2 down on the week. What's that? I go mute somebody else. Okay, and then so 2-1 on the daily. So you're just giving me all 2-1s. I like it. Again, my entry. Wow, it's going into a gap fill. So my entry would be under 34.38 for a move to fill that gap to 29.75. So I know it's not the actual low of that one candle that would typically be your entry, but gap fill, no, that's not right. Gap fill, there we go. On the right, so go ahead and do that, and then we have gap filled. And there we go. So yeah, oh, this is Chinese. Yeah, that's not helping the situation any. Anyway, that's what I'd be looking at. I'm not going to worry about the Browning formations and stuff like that. They seem to not respect them anyway, at least the ones that I draw. Okay, so anybody else with any other tickers right quick? No. Okay, cool. All right, so one of the things that I was seeing in the Discord, there was talk. Let me see if I can go back and actually find the message right quick. But there was talk about people losing money on Fridays, and the suggestion is that it's because there are 0 DTEs. So I only play weeklies. I don't buy the next week, mainly because I just don't feel like it's worth my money to say, I know I'm getting out of something today, right? I'm going to buy something and get out of it today. I don't really feel like paying the extra money, especially on a small account, to be able to say, I feel like it's worth it. So I buy weeklies. So if I'm looking at, and mind you, they need to be liquid tickers. So the talk was all about NVIDIA. Let me show you NVIDIA here. Okay, so the conversation in the Discord was all about NVIDIA and how people lose money on NVIDIA. I'm included. I don't like NVIDIA, and I'll tell you why at least here in a minute. So if I were to go ahead and draw some Browning formations and levels and things like that, yesterday, or on Friday, we did a 2-down day. So the entry point was below 200, right at 200. So we already have a psychological level right there. So if I were to take a look at the day on like the 15-minute, my guess is after around, so my guess was around $200. We had a lot of like teetering back and forth here. So this was Friday, right? We go below it, nope, go above it, go below it, go above it. So we had a lot of consolidation. Now on 0 DTEs, right? You're playing something, it's expiring today. If you consolidate, if your ticker is consolidating, if your stock is consolidating, you're gonna lose money. Why? Because there's this thing called theta. So it's called theta burn, and I'm not gonna get into all the intricacies of it, but you can Google it. It's called theta. THETA. Theta, yes. So the longer you hold something on Friday, the more theta burn you're going to have. And theta eats at your profits. You can be in the money. Let's say you bought a $200 put when it was up here at like 203-ish or whatever. Let's say you played the 2-2 reversal. Okay, so we're looking at a 15-minute here. We played the 2-2 reversal. We got in at 201.38. We bought a $200 put and we held it. Now, for let's see, we bought in at, let's say, 10:15 and we held it all the way till 12:30. Now at 10:15 we're good. Now we're going back and forth, back and forth, back and forth, back and forth. Every single time you see like this green candle, so you're going to be in some nice profit right here on this first candle that you bought in at, right? You go from 201 all the way down to 198.59. You got to be quick. You got to do quick hits on 0 DTEs, because as soon as this candle happens, this next one at 10:30, it goes above what your price target was. It's going away. I'm sorry, it goes away from what your price target is, and it goes above what you bought in for at that 21.38. The further and faster you move away on 0 DTEs, the faster you become unprofitable. Like this just eats away at your profit so quickly. Sure, you come back down, it's not as aggressive. However, you're not in the money again. And then you come back up, further up, mind you, right? We have a higher high here from the previous one. So you're coming back up in this other direction. And the longer you hold on to something, especially, I mean, this is consolidation. It's just wide consolidation in my book. $200 psychological level, like I said. So that's something to keep in mind, but you're just going sideways. So you're not profitable right now. You should have probably taken your gains right there, or set a stop loss nice and tight so that at least you walked away with profit. Because you see this next candle that happens, you're going to say, damn, I'm so glad that I, got out at least with $30 or $40 or $100, whatever you put in there, and set your stop loss at. So, this next candle comes back down, you're happy, you're thinking, great, cool, I think it can come back down. So at this point, 45 minutes has passed since you got in. 30 minutes has passed since you got in. So now the next candle happens, we go down, great. Well, you're probably profitable again, just not as much as you were when you first bought in here. So now you're saying, well, no, I think it can go further down. Now it does, mind you, at the end, towards the end of the day, after launch, it does go down. But you could have bought back in. Mind you, on 0 DTEs, the name of the game is taking your quick profits. Do not hold something till the very end. If you're buying a 0 DTE, the max amount of time that you should probably hold it, at least the max amount of time I hold something, is going to be about 30 minutes to an hour. That's it. If I'm holding something longer than that, what you have to do is try to average down on it, even though it's going in the direction you want it to. So you take this guy here, this candle at 11:30. It comes down to 199.56. You're in the money. Chances are, though, you're not in profit. Because theta, or you're not, you're definitely not going to be in as much profit as you were on this candle here, on the one at 11 o'clock, because theta is eating at your profits here, small percentages at a time, so it's hardly noticeable. It's like that little thing that happens, like with your bank, like if you have the what is it, that thing where if you buy something for like $1.99, they transfer that penny to your savings account. Like you don't notice it's happening, but it's happening. So don't hold for long. That's rule 1 on 0 DTEs. Get in, get out when you're in profit. Now, the percentage that you want to be in profit is up to you. I shoot for about 20 or 30% really quickly. If the profit comes faster, then all I do is tighten my stop loss, and I'll ride it and ride it and ride it. And I'll have a trailing stop loss, the trailing stop loss. I'm sorry. So I'll set my trailing stop loss for like minus 10 cents or 15 cents, or depending on, what I'm dealing with. NVIDIA, the spreads are wide, so it's a little harder to do that with NVIDIA. But the key is, as soon as theta starts eating away at what was worth $1, now it's worth 99 cents, 98 cents. Even though it's going down, it's just going to be, eating away penny by penny by penny the further the day progresses. So again, rule number 1, take your profits quick, take your profits, or set a trailing stop loss. Rule number 2, if you are holding something, and you're going to hold it late in the day, keep in mind that you're probably going to need to buy a little bit more of it because you need to average down. You can't just sit here and hold what you bought, let's say for $1, and let's say all it did is consolidate. It went sideways, right? Like you're not up, or you're not necessarily down. You're going to be down because theta is hurting you. So what you're going to have to do, even though the price has done nothing but go sideways, is average down a little bit. You're going to have to buy like another option contract, maybe a little bit cheaper, because at least that way, instead of being down, let's say $5, you're only down $2.50, because again, theta has been doing what it does best and eating away at your profits. So those are really the two things that I follow on Fridays on 0DTEs. I play Monday, Wednesday, and Friday for QQQ and SPY. So those work out really well. This whole strategy, again, get in, get out quickly, take your profits, and run. Because what you can do is get back in. So let's say you got in here. Oops. Let's say you got in at that 201.38 and it dropped down. Your 40% in profit, you sell, or you set your trailing stop loss. So then when you come back up, it sells. Cool. Okay, fine. You see the reversal, you're happy. Now you are below in time frame continuity, and you say, now I'm going to get in on the next 2-2 reversal I see. So here's your failed 2 up. We have a reversal to the down. So you're looking at a price target of the entry under 251. Mind you, $200 is a psychological level. So that's something that you need to keep in mind anyway. But we have our entry, and now we have our price target. We come down, we get close, but we start seeing a reversal, and it does exactly that. It reverses, and now we get probably stopped out. That's the smart move. Keep your stop losses tight on 0DTEs, because if it goes against you on a day where you're saying, I expect it to go down, the smallest move down will end up wiping you out if you don't have a stop loss. Or the smallest move in the opposite direction, I should say. That will wipe you out. So either watch your trade like a hawk, and know that if you start seeing something reverse, you're going to be negative very quickly. Or set a trailing stop loss or a stop loss and just let it be automatically handled for you. Remove the emotion, thinking that, oh man, I really think it's still going to go down. Now you could bet. I mean, that's essentially what you're doing, right? You're betting, and sure enough, it does go down. But you can always get back in. So this 2-2 reversal didn't work out well. Well, this 2-2 reversal works out a lot better. So we have 201 as our price target, or our entry point, 201.14 for our price target of 199.57, and then some. I mean, it just keeps going down. So this would have been, So this would have been, the move right here. So you do your 2 down, your 2-2 reversal, your entry there. Now, all I would have done at this point is tighten my stop loss. Actually, I would have set a trailing stop loss, because I'll let it ride. The move downward now, because we're in the money with our $200 puts, let's say, that we bought. So we're in the money. Theta doesn't hurt us as badly if we're in the money. I mean, it still eats away at your profits, don't get me wrong, but we're in the money. So it's not actually going to be like eating away as aggressively. Plus, with the continued move downward, we're not consolidating anymore until we come down to the very end of the day. But we're not consolidating anymore. So this is all working out in our favor on 0DTEs. And that's what you want to see. If you see stuff just go sideways, like we are at the beginning of the day here with all this indecision, it's wide indecision, but it's indecision, this is going to hurt you. So avoid consolidation. Look for downward trends on 0DTEs because they're your friend, and get in and get out quickly. And oh yeah, by the way, I prefer to play at the money contracts on 0DTEs. Why? Because if it dips below like what I have, like SPY's the perfect example, NVIDIA not so much, but if we play SPY, so here's Friday, SPY. So we have our 2-2 reversal here. Remember, we opened up here at 436.89. So we have a 2 up. My price target is going to be nice and shallow, but I'm okay with that because SPY moves very quickly. A 30-cent move in SPY is pretty awesome, and it happens in a flash, and you can get in and get out, or you can set a tight stop loss or a trailing stop loss. And that's exactly what I end up doing, right? Like I'll get in at 434.06, and I'll buy a 434 or a 433 put. In fact, I think I did a 433 because we were about to go below 434. So anyway, it drops. The next candle comes down all the way to 432.80-ish, and I was happy with that. I got in and I got out very quickly. And then, yeah, it dropped more. Bummer. Okay, well, I can always get back in. Here's a 3-1. So if I go 3-1-2, I'll get back in. We have a 432 and a 431 price target. So 432 is probably going to be what I'm looking at, or 431 puts. Again, at the money or very close to at the money. The nice thing with SPY, the fast movers, Microsoft, NVIDIA is one of them. Those fast moving tickers, you can get like 1 or 2 out of the money. Just know that if, I say that I think this is going to go to 431 and it ends up going up to 433, I'm going to be down very quickly. Do you start trailing? Okay, the question, do you start trailing stop when it starts to get in the money, or how do you do it at the beginning when you first buy the put? Okay, so when I first buy the put, I set a stop loss, a plain old stop loss of what I'm comfortable losing. That's my risk. So if I put $1, if I buy a contract for $1, or it's priced, if I'm buying a contract for $100, right? So it's priced at $1 on the, it's priced at $1, let's say. If I'm buying $1 contract, I'm comfortable losing, let's say 20%. So I immediately set my stop loss at 80 or 0.8. That's getting confusing. I'll just speak in what we buy contracts for. So if I buy it for $1, I'm going to set my stop loss at 20%. So 0.8 is going to be when my stop loss kicks in. If it goes in that direction, fine. I'll wait. I'll look at another time to get enter. If I get stopped out, I'll look at another time to enter. Because again, I have a thesis that things are going to go down just based on the fact that we haven't recovered from the open. I don't really see much attempt in this case to, we tried to go back up, but like, look at these upper wicks. These upper wicks are telling me the sellers are saying, no, sir, no, sir. And then we have a drop, and then, down. Okay, this 3 is interesting. We did create a higher high, but what the next candle is a 1. Oh man. Okay. Well, now if the next candle ends up being a 2 down, we have a 3-1-2 down. So, anyway, so yeah, I'll start with a stop loss. Now, once I'm in the money, once I'm in profit, if I've decided not to take my profit yet, I'll set a trailing stop loss, and it's a tight trailing stop loss, based on what I'm trading. If it's like Bank of America, CCL, DraftKings, like the slower movers that have like an ATR of like $1 a day, I set my trailing stop loss to be, 5 to 7 cents because they move that slow. But if it's SPY, I'm setting it at like 15 or 20 cents because I still want to, if we do get a reversal, like if so I play this 3-1-2, it hit my price target. I'm well in the money with a 432 put. I'm still in the money with a 431 put at the bottom of this candle. So I'm setting a trailing stop loss of like 15 cents, 20 cents. And then it comes down and we're good. Now we start seeing a reversal. So I got stopped out probably on this candle here of, because we came back, we started reversing because again, that's how things end up working on 0 DTEs. The smallest reversal can take away profits very quickly. So here we go, done. Okay, I'm out. Now I'm waiting for the next entry. And again, I can do this again and again and again, and I do this again and again and again on 0 DTEs all day long. So again, here's our 2-2 reversal. Entry under 430.82, price target price target's 430.18. So I'm going to be probably buying a 430 put. And we go down, 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 and we just keep going. So again, once I'm in the money, let's say 20%, I'll set a trailing stop loss on again SPY. Just really depends. At this late in the day, I'm tightening my trailing stop loss to like 10, 15 cents now, so that once it moves, if I buy in for $1 and it moves to $1.20, at least I'm walking with a 15-cent trailing stop loss. At least I'm walking away with $5. If it keeps dropping, it goes, let's say, to $2. I have a 10-cent trailing or 15-cent trailing stop loss. I'm now walking away with an extra $85 in the trade. This reversal would take me out, and then I'll just look for a new one. Or being that it's like 2 o'clock on a Friday, I don't trade anymore. All right, does that make sense with the trailing stop loss or setting stop losses? Next question was, how do I interpret the overlay? Okay, so it doesn't look that great on the 15 minutes. So the question is, how do I interpret this overlay? So what I have here is, because on a typical trading day, I have my setup a little bit different. Let me go and load that right quick. Daily. Okay, so this is my setup. I have the day, the 4 hour, the 1 hour, and a 5-minute chart here. I only have such a small time frame, 5 minutes, because I'm curious, once I'm in a trade, if I can add to my position based on like 5-minute moves. So I'll enter a trade like on the 15 or the 30-minute. And that's pretty much what I'm looking for. So with that being said, I don't usually enter a trade until after 10 o'clock. To me, after 10 o'clock, that first candle forms, that first 30-minute candle is forming at 10, or the second one, I should say, is forming at 10. And I've come to find that we get generally decent direction for the day after that, unless you have the Fed coming out and saying something that nobody expected, or Russia decides to invade a new country. Let's say we were going up in the stock market right now, right? Like, and some unexpected bad news happens. Well, damn. Okay, so now things flip. But we haven't seen much flip-flopping during the day lately. So anyway, I'll play the 30-minute candles. I won't get in until after, I have a 10-minute, after the like 10 a.m. candle, and then I get some good clarification on which direction we're going for the day. And then I'll just, enter on something, a 2-1-2, a 2-2, a 3-1-2, whatever. And then, so if you notice, right, we have a 2-2, a 2 up, a 2 down, a 2 down, a 1. So if I switch back to the 5-minute, and we're looking at, that was Thursday, I think it was. So, yeah, here we go. So here's Thursday. So we have the overlay here is 30-minute candles, and I'm looking at 5-minute. These candlesticks are 5-minute candles, but the overlay shows me what the 30-minute looks like, because now I don't have to go and say 1, 5, 10, 15, 20, 25, 30. I don't have to go count, 6 candles here to be able to say, okay, those make the 30-minute candle. Here's the high, here's the low. I can just, the overlay does it for me. So I can see that there was a 2 up, and now we have a 2 down, another 2 down, and a 1, and then a 2 down, and a 2 down. So that's all the overlay is. It's 30-minute candles, and you can change it. It's a Thinkorswim, wrong thing. It's a Thinkorswim study that I've put in the studies channel. In the if you type in overlay and search in the scripts and studies channel, you should be able to pull up all the links. There's 3 different colors of it. There's a light, a medium, and a dark overlay. So you can have multiple overlays on a chart if you want to. I just stick with the 1, the 30-minute. But yeah, that's all that script is. So while people are typing, what does it mean when they're connected? So it's just, so yeah, nothing. At first I thought it meant something too. It just turns out that I think because the programming that Thinkorswim is built in, it just can't handle breaking things out very nicely. It means the connections mean nothing. Yeah, I think it just means that it can't break them out nicely, and it's just grasping at straws, basically. Now, does anybody have any other questions about? I mean, again, I know the conversation in the Discord about the zero DTEs and how to trade them, or at least how to trade weeklies, was it was lengthy. I mean, I don't know if I answered all the questions or addressed them, but I mean, when I start going over my small account growth series that I'm working on, this is a huge strategy in that you play weeklies and zero DTEs to get that initial growth so that you can play bigger things on Mondays and Tuesdays if you want to down the road. So it's definitely very important to understand that things with zero DTEs, if the move goes in the opposite direction that you're thinking it is, you'll get stopped out quickly, or you'll go negative very quickly in your trade. And that's why stop losses are important. It's always a bummer when you get stopped out and your trade goes in the way that you were thinking it was going to go, but that's just kind of part of the game. So that's where setting your stop losses and exploring where you want to set your stop losses really works out for you. I've come to understand these. I have a finite list of tickers I watch every week. If you watch my coffee and charts every single weekend and my videos that I've been doing like daily now, I don't know if that's sustainable for me, but if you watch those videos, I go over the same tickers. Like, I really don't have a ticker from left field that I'm going to be trading. And the main reason is because I have a watch list that I understand the personalities of each ticker in. I know that setting a 20-cent stop loss on an at the money SPY put or call works out for me relatively well. I know that setting a 5-cent stop loss with trading like Bank of America works out really well. Stuff like that. So I've been able to, through trial and error, figure out those things. And again, that's all stuff that I'm sharing in that series, just to try to help people understand that you don't need to walk into this game with $10,000, $15,000, $20,000 to be able to turn, to be able to be profitable. You can do it with 500 as long as you have a system and understand what you're doing. So with that, I mean, that's really all I got. So if there aren't any other questions, I think we'll wrap it up.
I did have just one question.
Sure.
First, I wanted to say thank you. Everything that you said was really helpful, especially with the different strikes to pick. I think that was a problem for me. On zero DTE, I think I'll either say add the money or maybe even one in the money if it's not too expensive.
Yep.
That was a problem for me on Friday. But my question is about reversals. So you're looking at reversals on the 15-minute?
I look at I did not explain that well, did I? So I look at reversals on the 15 or the 30 minute. Typically the 30 minute. That's really where I shine on my 30 minutes. Just because I like the magnitude on the reversals. So case in point, on Thursday with QQQ, we have a 2 up reversal and a 2 down. So you could have entered here under 344.98. And I would have put my price target for this, end of day, like 30-minute gap fill to 432. Now we did come down and then come back up. So if you had a stop loss or a trailing stop loss, you would have been stopped out here. Now, if you just set a standard stop loss, you'd probably been okay, and you would have been able to stay in this trade essentially the rest of the day. On Thursday. So unless you eventually changed it to a trailing stop loss, which I did, I will always convert stuff to a trailing stop loss because I don't want to leave too much money on the table. That enables me to almost find the bottom in a reversal that happens here. So like this, two down right here, failed 2 down. So the stop loss, I would have probably gotten stopped out of this candle, but I mean, goodness gracious, you would have been able to ride let's say a 344 put all the way down to 338, 339 before you got stopped out. And oh darn, I left 15-20 bucks on the table, but you know, it was up, you know, 200-300%. So I'll enter on the 30, and then once I enter, and that's why I have that 5-minute chart up with the 30-minute overlays. Once I enter something, I like to add to my position, right? That's part of the thing that the strat teaches us. Add to your winners. Don't add to your losers. Cut your losers. Add to your winners. So what I'll do is I'll move to a smaller time frame. Like in this case, if I entered on a 30, I might be looking at a 15-minute or a 5-minute, but I'll look for, you know, reversals going in my direction again, because everything has some sort of like pullback. While we didn't really see a lot of pullbacks on the 30-minute, we do see pullbacks and consolidation on the 5-minute. So entered here. Well, here's a 2-3. So that, I mean, that's an entry point right there. So I could have said, okay, let me add to my position. So now we have some more consolidation. 2 up, 3, 2 up, 2 down-ish, 2 down, 2. Now here's another 2 up with a shooter. So maybe I'll add to my position there and just keep riding it down. So while I entered with 1 contract, I had another chance here. So now I have 2 contracts, another chance here, 3 contracts. I know that that's like very different than like the buy low, sell high mentality that we're all so used to hearing. You know, add to your, why would I buy something more expensive? That doesn't make a lot of sense until you see it work for you. So yeah, I mean, let's say I bought this guy for $1 right here, right? I bought my 344 put for $1. And then I come here, and well, nice thing is it's probably still worth about $1. Actually, it might have even been a little bit cheaper, just because again, theta is, you know, kind of getting after me. So maybe it was worth 98 cents. Well, now I just averaged in with 2 contracts for a 99-cent average. Okay, cool. Well, now we come down here. I'm in the money. I'm also, let's see, I'm in the money by like almost $2. So, and I'm in the money. I'm sorry, almost $1.20. We'll say I'm in the money by $1, just to round it. So now my 99-cent contracts are worth $1.99, and I want to go ahead and say let's add one more. So I add another one for $1.99. We'll make it $2 just to make it easy math. So now my average is $1.50. So $1.49. So now I have 3 contracts with a cost average of $1.49. We continue our move down. I mean, I'm multiplying at this point, right? Like it just keeps going and going and going. So now I have 3 contracts that are all winners that each are worth, let's say I get out at the $2 mark, or I'm sorry, the $3 mark. So I just made $150 on those 3 contracts that I averaged into for $1.49 on the way down.
So you would say this would work best if you're in the money though, right, on 0 DTE? Because on Friday I did average down, but since I was never in the money, it didn't help me at all.
Right. Yeah.
So you would say if you're in the money, you can add to your position like on a smaller time frame where you see a pullback.
Right. Correct. Yeah. Yeah, again, on 0 DTEs, I stick with at the money or in the money. I don't go far out of the money at all. That's just a rule of thumb for me, and that's worked out great.
Okay, got it. Thank you. That was extremely helpful.
Sure thing. Anyone else? Okay. Well, I guess that's going to conclude Coffee and Charts. I think this is episode 5. That's going to be crazy. I'll get the video out on YouTube, and we'll get into trading tomorrow morning. All right, y'all. Have a good Sunday.